All right, welcome to the webinar. My name is Daryl Martin here with apexinvesting.com. And this is a Be the Sniper or Be the Target webinar series where we go through charts and review the sniper trader system to teach you how to better be the sniper and not the target. So with that, let's throw up the risk disclosure. Know what you're doing before you do it. And I want to introduce something that one of our traders, Karen, came up with. Said she came up with this grading system where you grade your trades. That's how she grades all of her trades. Thought it was a great idea. And what it is, she gives herself an A if she followed the rules and she won. She gives herself a B if she follows the rules and she lost. She gives herself a C if she broke the rules and she won. And gives herself a D if she broke the rules and she lost. What do y'all think about that? About doing that like on your 90-day challenge spreadsheet? So F is definitely a broke rules and blew your account. What do you think the most dangerous one on here is? Yeah, C is definitely the most dangerous. You break your rules and you win, then you're tempted to do it again and again and again. So of course, if we added the F on there, of course, that would be the most dangerous one. But the most dangerous one as far as your continued trading is of changing. What will happen is you'll end up changing everything you do. And because you'll reward yourself for breaking the rules. And it'll work, and then it doesn't, and then it just blows up. So yeah, you could use that to give yourself a GPA. So really, you don't ever. What are the two that you like? If you're gonna have two, obviously you always want A's. But in reality, what are the two that you should only have? So Brent got it. There you go. Yeah, a bunch of y'all got it now. A's and B's only. Exactly. Yeah, and D, what happens on D's is that they turn to F's because you break the rules and then you want to be right? And then all of a sudden you don't take your profit where you're supposed to, or you don't take your stop where you're supposed to, and it just gets worse and worse and worse. So D can be the second most dangerous. It could be the biggest one for blowing your account. And C can be the most dangerous for completely like messing up your trading system. Exactly. Go for 4.0s, be the valedictorian of your class. So we're really just a simple system for you to trade yourself. So, and then today I just wanted to go through and do a little bit of market review. Also go over the stuff. Does everybody understand the information for getting the second account? We've already had a win in the room. On the second data feed using the power scalps and stuff like that. Does everybody understand that they can go get a second data feed now with Rhythmic, with Lilu? And as long as they have a Lilu account, they just go under market data. And then we have a discount code for 50% off the market depth, where you can get all 4 exchanges if you want them for $15. So I'll post that coupon code in there for you. There you go. Does anybody have any questions about the additional data feeds and where to get them at? You got to pay it each month. So somebody says, why would one need an extra data feed? Well, if you want two things. One, if you want to be able to read the unlimited DOM to be able to place orders, because the unlimited DOM gives you a massive, massive edge. So it gives you a huge edge when you're trading. Then that would be one of the reasons why you'd want to do it. And then the second reason would be if you want to do power scalping, you're going to want the unlimited DOM to see the trades in advance. So for instance, if I go over here, there's 440 contracts right here, and so with the power scalping, I sell 2 ticks below that with a stop, a tick above it, and a take profit 2 ticks below it. And I can see that there's 400 orders up there. Do you think if I had a take, let's say I had a long trade, would I want to have a take profit behind that 440 orders or with it? I know the 50% off works for at least 1 month. I'm trying to get them to waive it for future months as well. It's only Apex traders that even get the 50% off the depth. So that's like an existing power scalp right there. Where do you find it on Facebook? Let me bring that up. So you pull it up right here. It'll be under the announcements, or you can click ATM. And it's right there. I'll put the coupon code in here too. So that way we have that. There's also in the comments, I put a link to the ATM playlist for the DOM playlist for YouTube, which doesn't go over the power scalp strategy, but goes over how to use the ATM, set up the ATM, and this longer video goes in the DOM in general, and just tips and tricks and mistakes to avoid. It's incredibly valuable. If you don't think you need the DOM, watch this video, and it'll teach you why you want the DOM, whether or not you're power scalping, okay? But you want to watch this video if you want to learn how to power scalp. And one trade easily pays for the extra data feed. So, I mean, it's pretty, like one trade on a single contract will pretty much cover it. So, I mean, and there's trades pretty much almost every night. And then, yeah, you'd pay the extra $10. Like if you logged into Lilu, went over here, you'd see market access. And you can see like $30 extra session. So you're going to need the $30 extra session. And then you can either do the $10 CME, or if you want to do the $30 one, you can get that for half off if you use the coupon code. Okay, and that's how you sign up for them. Power scalps are done usually in the evening only. But the DOM is valuable all throughout the day. And again, the one video that I think everybody should watch is how to use a DOM in Ninja, tips, tricks, and mistakes to avoid. So that one even has the Ninja DOM where I cover it. The coupon right now is good for the first month. I'm trying to see if I can get them to extend it beyond the first month. You're not going to be able to get the unlimited DOM unless you're using Lilu. As far as I know, Keith, you may have to call. You could try calling AMP and asking them if there's a way. So check that out. You'd have to call your broker and find out if there's another way to get it. Now that's a great question. Sean asked, do we still need the Ninja DOM if we got the extra data feed to use the DOM in Rhythmic? Really, you don't. So you could downgrade to, I don't know what it is now, like $12 for just a single level. And instead of paying like the bigger fee for all exchanges in Ninja, and you could just get top level data only and save that money and then apply that money you're saving towards the Ninja DOM. So these videos right here, yeah, they're on YouTube. The playlist, like I said, is inside Facebook. Here, I'll post this. But it's also linked in the comment section on our Facebook group, so make sure you do join our Facebook group. This is the only place you can find this video on how to power scalp is inside the Facebook group. So make sure you join that. I'll post the Facebook group link as well. There you go. And that's also, if you're looking for the link and you're watching this later, the link to the Facebook group is on the sniper page somewhere around the elite room and all that. Okay? All right, does anybody have any more questions on that, or y'all good on that? As far as the data feed and the depth, CME just added depth of market as a fee. So on Friday, so that's why that went into effect. Anyone can trade at night, Tony. Yes, you don't need any special privileges or anything like that. Anybody can trade at night. All right, sweet. Well, with that, I'll wrap that up. The only place to find the Power Scout video is on Facebook. You can find the YouTube videos for the ATM, like I just posted in the comment section on the playlist video for ATMs and DOMs. You just go to our youtube.com/Apex Investing and you can find the DOM videos, but it won't have the Power Scalping video. That's a private video. It's a bonus video for being part of the Facebook group. Hours at night are anywhere from 6 o'clock to, 6 a.m. Usually margins are the same at night as they are during the day. If you're with, like, say, Ninja or Amp. Sometimes they go higher. You have to check with your broker. You'll know real quick. If they're with Lulu, you don't have to worry about it. You can power scalp early in the morning if the volume is small enough. So again, to take the same example over here on this account, see how these are like 20, 30, 50, 60, then all of a sudden there's 400. So you need small numbers with really large numbers. So you cannot practice depth of market during replay. No. Lulu is for anybody who wants to get get funded and not have to take the risk in their own account. So you can't understand how the number of contracts affect it. Well, think of it as all these people are in line to get their order filled. Okay? And here you have 470 people in line. And think about all these as an aisle. Like if you're at Walmart, right, and you want to check out, well, this is the longest stinking line. It's going to take forever to get through. These lines are shorter. Okay? So when the market comes up to this, it's going to have so many that usually it's going to bounce off of it before it goes through it. So you're basically just grabbing a few tick scalp. So when there's a lot of orders, they have to fill all the orders. So when there's a lot of orders right there, it's going to get stuck and bounce off of it. That's why it works. Lilu is who we do funding through. I'll send you the link. They work with Ninja. There you go. So that link right there, and I tell you all about it and exactly how it works. And also you get a coupon code to get a discount. So some good questions. I like questions. I mean, y'all are asking, you're engaged, thinking about everything. Anything else? Nope. Okay. Well, with that, let's bring up some charts. What is PDT? The R traders for Lulu only. You don't have to worry about pattern day trading rules for futures at all. Pattern day trading rules only apply to equities, such as, stuff you trade on this New York Stock Exchange and NASDAQ. Not NASDAQ 100, but the NASDAQ exchange. Like Apple, Google, things like that. All right, so let's go back and let's do. I don't know why that's on auto. Probably was playing with something in Sim earlier. Let me just change it, and I'll swipe my account later. All right, so we can go back and look at. By the way, yesterday morning, we actually got all three of these. And I called them because one of the things that happens in the room is I will call out trades based on what I just call them audibles. Okay? An audible is when I see something in the market that you probably don't see. I'm watching a detailed OP chart. I'm watching a 5-minute chart. I'm watching a 30-tick chart. I'm watching the simplicity chart. I'm watching the micros. I'm watching the full-size contracts. And I'm watching other indices all together. And so yesterday I actually called these. I called this long right here, which was a double TX. So it's a trapped X box. We went long. I called the next one. We went long. I called the next one. And I said this one is going to go to settlement. And it busted right out. And it went to settlement and came back off of it. We had our first three trades literally in the first 10 minutes of the day. So we started at 9:35. We were done by 9:40. So really in the first 5 minutes of the day, of the trading day. So, well, part of that is I was watching the DOM and I was watching it get weaker. Also, just the pattern of when those TXs build up like that. Usually you're ready for an explosion. And the market often, when it's that close to settlement, is going to pull back to settlement. So it's, the audibles are 20 years of trading experience that I can't necessarily put into complete systematic detail. But the trades are on there. But let's go and look at today. I like to cover current day usually when we're on our webinars. So any of y'all, I know some of y'all were trading early this morning and knocking it out of the park. So if you're trading really early, we had right here, what was this trade called? What would we call this trade? Yes, the trading assistant would have caught those. Yeah, it's an elevator. It's when you have at least one cluster in a coil chop with a trapped X box on the third bar in the direction of the trend, okay, with a paw. Well, then the trend changed directions. And we had another one right here, another elevator, went on down. But let's go ahead and get to after the market opened. But yes, the trading assistant would catch those. You got setup 4s, which are those ones that I had talked about yesterday. So if we go on over here, get to 9:35, and let's start looking at stuff. One thing that I know can be helpful is it can be really hard to see the ODD numbers. So you can go down here and find your oscillation detector indicator. Let me make this smaller. Here we go. So right down here, and you can change the color of the black one because it can be hard to see. So I'm just gonna make it like fuchsia or whatever. I don't know how you spell that. I just want to make it some other obnoxious color. There we go. Double clusters are okay when used in an elevator. Yes, they are. That's actually covered on the elevator video in the sniper page. So now that makes the ODD numbers that are black more visible. And yeah, if you want to make the font bigger, you can make the font bigger. Those big numbers, yes, are volume on that run. That's exactly what that is. But we use a special formula to actually keep the run, not just every zigzag. Alright, so anyways, that was a potential ODD. That's what that diamond means. But we didn't have any ODD because there was another OD number before it. And so let's just scroll through and let's look. Okay, so we got a trade right here. Can we take that short? Like, do we have 3 levels in our way? You got to stack. So that was one that we called out short. We actually did go short on because it was right on the wall. That was the only reason I was willing to take it. So came on down. And then right here, what do we have? We have an elevator, exactly. Okay, that's a cluster. By the way, this was a trapped Xbox with a mini magnet and a paw on a ZOI. Let me go back to this one because I want to give you a little bit more context to it. Not only do we have a trapped Xbox, we had a mini magnet paw on a ZOI. A lot of y'all probably don't even know what that is, but do you know that there's a trade for mini magnet and paws on ZOIs? Setup number 3. It doesn't happen that often. Okay? And they're strong trades. So again, that was another reason I actually was willing to take it. Okay? So mini magnet and paw on a ZOI. You don't even need an Xbox, but we had a trapped Xbox also. And we had our DR red. So we had literally 2 signals at the same time. One of those, number 3, is a very strong signal. There is not a number 3 indicator because there's no way for us to really read that because ZOIs can last forever. Might be something we can do in NT8, but definitely not a way to do it without overloading the processor in NT7. But you had a number 2 setup, but you also had a number 3 setup. Okay? You also had it at a ZOI crash level. That's right. So see the ZOI crash, the trapped Xbox with DR, the paw, the mini magnet on the ZOI. You do not need a trapped Xbox on a number 3. That just happened to be another bonus on top of it. I said you do not need a trapped Xbox on a number 3. You just need a paw and a mini magnet on a ZOI. It was a bonus to have an Xbox also. What is a ZOI crash? A ZOI crash is when 2 different ZOIs crash into each other. So you had a long struggle and a short struggle crash into each other at the same proximity of price. See right here? And what that means is something is going to happen. It's going to move off of that level. Market came down, pulled right back up to it. Then we got a number 3 and a number 2. And then it took off. Went right down to the dynamic magnet to the tick. All right, so did y'all pick up a couple things on that one? Yeah, setup threes are ones that you could go for more. I would have been a little cautious to go for a whole lot more because, I mean, we were coming right into settlement right there. And, I mean, we had a flux pivot and settlement. We had a lot of stuff in our way, so I was glad just to get the scalp on that one. So, the only reason I took that trade is because we had so many things stacked in our favor to go short. If you didn't see all that, okay, so if you didn't see all that, what's my definition of settlement? First, if you didn't see all that, and all you saw was a number 2 with all this stuff in the way, should you have taken it? Can you see why I took it now? My definition of settlement is the same definition as the CMEs. It is where the price settled at the previous day at the close, where they take the last 30 seconds of trading, they take the volume-weighted average price of all contracts traded at all prices, and they divide it by the number of contracts traded. It's where the market settled the previous day. Well, no, we had a gap wall right here. Maybe hard to see it, but there's also a green ice and there's a ZOI. So you had 3 things in your way. Everything on this would be on the free version except for like the arrows and the diamonds and stuff like that, because that's part of the automated trader. So the question was, is everything on here what you'd see in the sharpshooter course? Yes, except for you just wouldn't see the automated pieces like the arrows and diamonds and circles and squares. Gap walls are pretty powerful. I treat them like walls. Do you have a way of telling when the market might go in a long run? Well, usually if it's a setup 3, sometimes if it's a setup 4 or 5, especially a 5, which is the same as a setup 4, but it's coming off of a ZOI crash. And then of course your double TXs can often go far. So, but the simplest way is simplicity. That's what I look for. If I think it's going to go far, I'm looking at simplicity, which is the last section in Sniper on the training area. It's like section, I don't know, 15 or something like that. And simplicity is how the biggest way that I look to see if it's going. So, for instance, this is what, 1102. So let me pull down over here and scroll back a little far. So at 1102, right there, we had simplicity red, angling down on both levels, which means that we do expect a big down move. So do you see that? Do you see both of these are red and both are angling down? All right, so does everybody see that? A gap is when the market gapped. It opened at a largely different price than it closed on Sunday. Like, so where it closed on Friday and where it opened on Sunday. Those are usually the big gaps that we're going to mark. So it closed like at 9,600, and then it opened up back up on Sunday at 9,520 or something. That would be a gap. So simplicity is used as a confirmation, yes. So I should cover that in the third video on this in the simplicity section. Christopher Davis, something about a chart not loading for you. I'm not quite sure which one you're talking about. But you can see simplicity called this short right down here. So, and then over here you can see where simplicity is calling it long right there. And you can see it go up. And you can see where you got two different colors, so it's calling chop. And all of a sudden it goes short again, and it calls a short trail. So, you only got much out of this trail, but the only thing that you're looking at, keep it simple. Y'all are trying to look. I get questions about different things. You're just looking at the angle and the color. They're both in the same direction. Keep it that simple. Like, really, it's not bad. I want you to keep it simple. That's the whole point of it. Christopher, it's probably because you're trying to load expected volume on your chart. If you are, that's going to take a long time because it loaded the last 4 months of volume. And if you think about everything that's happened in the last 4 months with the massive volatility we had, it calculates 4 months of volume on every tick. And so you're going to want to remove expected volume from your chart and then connect to your data. So the way you remove it, you just right click on the chart. If you're loading the basic TX chart, and then you'll scroll down, you'll find expected volume, which I don't have on here right now, and then you'll take it off. It's just called Apex Diagnostic Expected Volume. That's probably why your chart is taking forever to load. The number 3 requires a mini magnet and a paw on a ZOI. Literally on a ZOI. Like this. Yeah, simplicity goes in both directions. It's not just a moving average. It's the second second indicator I ever wrote. It's based on the volatile trend line, and then I tied in live implied volatility. But to have it, you need a second data feed, or you can use the charts in the room, such as, like right here, you can go in, and there's the simplicity chart. You can always zoom in. You can say, I want this to be, I want this to fit like one screen size here. Like that. Or you can go over here. And you can zoom into it. And then just scroll down. And you can just have that chart up. Like that. Right now, you don't need expected volume for triple dippers. In normal market conditions, you would, but the markets have been anything but normal. The world has been anything but normal lately. Can you use simplicity for entries? I sometimes do. I'd recommend that you be really cautious on doing it. I would stick with doing it with entry, like right here, you had an entry to go short, and Simplicity said go short. So it took you on down, and it would have stopped you out right here on Simplicity on the second. Like when it came back and retraced, it would have knocked you out right there, which isn't bad. Would have been a good little run for 30.57.50 down to 30.54.75. I mean, a few points. $150 contract. The triple dippers, we don't use them on ES because ES has too much choppiness, but essentially what this would be a winning triple dipper, but it's when you get 3 triple dippers. It's called setup 1 on the sniper page, on the bootcamp page. When the market reverses, you go long right there and you take profit right there. Actually, sorry, you go long right there and you take profit right there. Yeah, they're the meaningful line. There's a dotted and a solid line, and both must line up on Simplicity. You really should go back and watch the Simplicity videos. Yeah, triple dipper can always be a good confirmation on a trade on ES, but I just haven't found them to be as reliable enough on ES because it's more likely just to move a bar or two and go back, whereas NQ is a lot more of a volatile instrument. So they seem to work a lot better on NQ. The triple dippers have a lot of... They have 3 different divergence and hidden divergence formulas built into them. Rich, she said it on MES. And the other thing about triple dippers, you don't ever take them when there are several in a row, and you don't take them in strong trends. You just take them when the market's chopping around. If you're just taking triple dippers like wherever they're at, then you're going to get hammered. So you need like more of a range-bound, choppy market for triple dippers. Somebody was asking about ZOIs being as strong, and I was telling them that they're not as strong on MES. I don't take triple dippers in trends. I like them when the market's just oscillating around, because that's all it is. It's a very small oscillation trade. It's never meant to be anything more than a oscillation trade. Like it's not at all meant to be anything more than a scalp. So if you put in that context that the trade is not expected to move far, you probably wouldn't be doing it in a strong trend. And if you don't like them, don't take them. They're probably the lowest probability setup. They're closer to 80%. Yeah, triple dippers have nothing to do with DR. But again, we don't trade them on ES anyway. So a lot of good questions coming in tonight. All right, so what do we got right here? What is this trade? That's where we need to back up and go over all the stuff on that last trade. Elevator. It is an elevator. It's not a double TX. It's an elevator. It is an ETX. So it's actually an elevator and an ETX. which makes it pretty dang strong. Again, when you get to combine those things, remember ETXs are really strong, right? They go through levels, don't they? So if that was just an elevator, would I take it? Or would I not take it? So it's sort of like this trade back here. It wasn't just a short trend, it was a number 3. This wasn't just an elevator, it was also an enhanced Xbox. So going into all that stuff, I probably would not have taken it if it was just an elevator. But since it had the ETX also, and again, to help you with the ETX, remember, it's a trapped Xbox. Okay, so trapped order, exhaustion box, with a paw or mini magnet on it, within 2 ticks of a paw, a mini magnet, or ZOI, or an eyeball. And there it goes. We got lots of levels going on. See, there's those like multiple triple dippers I'm talking about. Like, definitely don't take them then. All right, what do we have here? We do not have ODD. You have to be making a lower low. You can't compare a top number to a bottom number. So you cannot compare a top OD number to a bottom OD number. You can only compare a bottom to a bottom for going long, or a top to a top for going short. And so it have to be 2 of them coming down or 2 of them going up. So we got a double TX right there. Also, again, on that ice level. There actually is a trapped. Yeah. It's one of the things we improved in the template. We made the trapped larger. And a paw. And coming off a wall. And coming off a flux pivot. Alright, so do we take that trade? Okay. Ouch. So did that get us? Yes. Is that going to happen? Now, is there anything you could have done? Okay, some of y'all are saying it, which is really good. Is there anything you could have done to have made that trade a winner instead of being a loser? Some are saying tighten your stop, but how would you have known to tighten your stop? Take profit before the dynamic magnet. 1 tick before the dynamic magnet right here. If your take profit is just like 1 or 2 ticks on the other side of a level, put your take profit right in front of it. It's just like a big order. It's just like over here on this. Right there. Just like having a big order. If you had to take profit right here at a tick above this, would you want to be behind the 467 or in front of the 467? You need to be in front of it. It's the exact same thing with the level. That's a dynamic magnet. A dynamic magnet means that's in like the top like 0.03% of volume that's taken place at that price level. So you'd want it right in front of this. If I was going to put it in front of that, I just wouldn't take it because I'm not going to take it just for 4 ticks. But in front of this level, that's where you should put it. So Matt, you're asking how was it valid? It was a double TX. So a TX there, TX there. That's what white means on the detector there. I have my live TX, double TX to white. I have my elevators gold. I have my ZOIs Dodger blue, and I have my third bar slings purple. So that is what you could have done. And that would have been a very good conservative move on that. Now, if you didn't want to just take your profit, let's say you're a little more aggressive, then what you could have done is you could have taken your stop and moved it down to break even when it hit this level. So if it did break through and it bounced back up, you'd at least just be break even on the trade. If you wanted to move the detectors to the top, you could move them. I mean, you could grab it and, I guess, move it up there like that. Just grab it and change it around. So yeah, if you wanted them up to the top like that, that would be a way to do it. All right. Yeah, if you miss them at the bottom, put them at the top. Just you're gonna have to grab one of them and move them up, and then you can change the other ones to like panel 1. But don't just change it to panel 1, or they'll be in the middle of this thing. So grab one of them. You click on it and grab it. Like click on like one of the things, and then move it up here where it'll highlight blue. You see, and then you can let it go. And then you can change the other ones to panel 1. All right. Don't have anything there. Well, do we have something there? What do we got? You got enhanced. Yep. And you have what else? Double TX with it enhanced. All right. So we take it. It's almost ODD. Yeah, but not quite. There we go. And now what do we got? Now we got a third bar swing. So third bar swing is a trapped X box with a mini magnet or paw on the third bar after a reversal bar. So trapped X box with a mini magnet or paw on the third bar after a reversal bar. So do we take it? And they are best when served when there's a trapped X box on the actual reversal bar of the first bar. And they're also best when there's no wick on the second bar. So that sort of lines everything up and has nothing in its way. Perfect trade. Like nothing in the way. So yeah, when you get like the ideal one has a trapped X box on the first bar, no wick on the second bar, and then you get a third bar swing and nothing's in the way. That's like that's one of those ideal setups. $14.06 had no trade. There was no OD divergence. It's against the trend. So no, I would not have taken that. You could have. I guess you could have taken the ETX. I'm sorry. Yeah, yeah. I just jumped over because I saw the diamond. But yeah, you did have the ETX. So on both of these, what really made both of these trades valid, I'm glad you brought that up. What made both of these trades valid was the ETX on both cases. So you're also coming off a 0.25 dev, which is very strong, especially on ES. But the ETX, and again, the ETX is a trapped X box with the polar mini magnet within 2 ticks of another paw or mini magnet. So we got that there. This is a trapped X box with a polar mini magnet within 2 ticks of a paw or mini magnet, right? That actually is what made this trade valid. If we did not have an ETX on this trade, should we have taken this double TX? No, it was against DR, so that'd been a no. What's the other reason? What's the biggest reason why we would not have taken the double TX? 2 to 3 bar chop. But did you have a different trade in there that doesn't have a 2 to 3 bar chop rule? Yeah, you had an ETX. See, we got our little cheat sheet, which you can download. Right? And on ETX's 2 to 3 bar chop, there's not a reason to not take a trade. Okay? So due to the ETX, that actually was a valid trade to take. And that was a valid trade to take. Alright, let's see here. And I sort of like going through ES with you because it's a little slower so we can, dig into some of these details a little bit more. Alright, so would y'all like a bonus lesson? Alright, so you know what ODD divergence is, right? It's when you make a higher high with less volume, right? A higher high with less OD on it. Does that make sense? Like, y'all got that down? Like, if this would have been a higher high and it had 153 versus 12, like if the high would have been here, that would have been oscillation detector divergence. Okay? So everybody on the same page on that? Because to get this lesson, you got to have that understanding. Okay. So if a higher high with less is a divergence, meaning we went higher with less power, so it's running out of steam, right? That's what it means. ODD divergence. Yep, doozy. It's running out of steam. What does it mean if you don't make a higher high and you have more volume? The market ran with everything it could and it couldn't break the same high. Check this out. We got 12,000 versus 30,000. So we have a lower high with more volume. So it pushed even harder and it couldn't go as high. That is called hidden divergence. And that means it's a good reversal. Yeah, some old school. So just like OD divergence, I'm going to repeat it again. Just like OD divergence is when you make a higher high with less volume, so it's getting weaker. What if you don't make a higher high, but you have more volume? You don't make a higher high, but you have more volume. That is called hidden divergence. So like we had 12,000 here, we had 30,000 here. We didn't make a higher high, but it took more volume on that right there. So it's still showing you the divergence exists. You just got to see, is it a valid divergence of, is it a hidden divergence or is it a regular divergence? So, I mean, it tried, but it didn't have enough. So we just simply, it's really simple. You didn't make a higher high, but you had more volume. Well, it'd sort of be inverted. So percentage would sort of be inverted, right? So this one you'd look for it to be like 50% less. This one you'd look for it to be like 2 times more. So yeah, put with more volume, it still couldn't get back to the same price. Hidden divergence is very strong. Okay. $14.43 is not a valid trade because it went lower with more volume. See, that's 18,000 versus 32,000. So that would not be a valid trade. It went lower with more volume. That's called confluence, not divergence. That's why this one went further with more volume but didn't go as high. Or if it was inverted, if this number was like, well, this wouldn't apply because it went lower low. Yeah, this is saying the trend is more likely to continue than it is to say that it's going to reverse. That right there is saying it's most likely to reverse, which would go with that continuation when we saw. So there we go. The closer together they are, the better. Just like on regular divergence. And you could use some caution on trading into hidden divergence as well, which may help you. It's always going to be the exact same on ticks. You're going to go 2 bars from the low. 2 bars. If you're on an 8-tick chart, you're going for 8. If you're on a 10-tick chart, you're going for 10 from the low of the setup bar. It's the same on every trade. Pardon me, on every trade. There's not an exact number, just close. Sorry, it can't all be put into math. Yeah, you'd still need a setup bar. You'd still need to have a trapped X box on it. You wouldn't just take it because it was hidden. You'd want a trapped X box on it. So, just like on divergence, you need a trapped X box on it. Because things can diverge and diverge and diverge. You know. So you need something saying that there's weakness, exhaustion, time to go the other way. Alright. Let's see, we got a short here, but it's in a coil chop. So do we take it? We don't have a cluster, so it's not a elevator. We don't, which is good. Okay, now we have a Double TX long, coming off of a wall, laying a mini magnet. Do we take the long? I got one person. Everybody else is nervous. What do I say? There's no ZOI in the way of this trade. There's no stack in the way of the trade. That take profit's going to be well before that stack. Oh. Still got it. There we go. And took profit. And it was, yeah. So it turned into a range, but it wasn't ranging yet. And we're at we're sort of at the bottom. You can say it's sort of the bottom of a range. Yeah, so that would have given you a little bit of a heart attack, but it made money. Then it broke the stack with some viciousness. Got a third bar swing right there. Looks like we also have an elevator that it didn't mark. Oh, there's no trapped on it. But there's a third bar swing. Do we take it? And it's a winner. All right, so was a good day. It had a couple areas that were challenging. Right? We learned, like, one, how to read a couple things new. Two, how to pay attention when you got a level in the way, because that turned the one loser we had in the day. The one loser we had in the day was resolvable by simply putting your take profit in front of the level right before the take profit. We had a lot of winning trades. That was on ES. Now, that would have been a lot of patience. That's 8 hours of patience. Right? I'm not saying that's simple. I'm not saying you're sitting there for 8 hours. You only got to get the first 3. But today required more patience. We didn't get it done in 10 minutes. Right? But was it still a good trading day if you followed the rules? We had a lot of people get 4-0, 3-0. I had some people get more than that. But it was a great trading day. But if you broke the rules... So yeah, hidden divergence would work for lower lows too. If you broke the rules, it really would have impacted you. No, we can do the exact same thing over on NQ. You're going to have a lot more trades on NQ. NQ is just as good. Big thing is stop them when you're up your 3. Rich apparently did every single trade on ES, MES, NQ, and MNQ today. 42 winners, 16 losers. If you took, I guess, every trade. So yeah, that's not bad. And that's taking all of them. Nah, the day marches are normal. So if we had more time, I'd go through NQ2 today, but we can do that on the next one. But, anyways, did y'all get some good stuff out of this tonight? Was it worth your time? Rich. So I know it's like just going through the basics, but it's like, I think that's sometimes what we need more than anything. Just going through this stuff over and over again until it's just second nature. I mean, there's even stuff, I don't know if you caught it, but there was that one, like, ETX short I totally missed. One of y'all caught it. You know, and it's just, like, that's me, right? And I made the system. So, It's easy to miss trades. It's easy to see things, but yeah, the more you see it, the more you walk through it. And, this is something you can do too. You know, sort of the last challenge, the last thing I'd like to leave you with is you can, at the end of the day, whether you traded that day or not, you can start out the day and you can do the exact same thing, just bar by bar. You don't have to do replay. I mean, that takes a lot of time. It's a pain in the butt. Replay is good for getting used to hitting the buttons. That's what replay is good for, in my opinion. That's the only value of replay, is hitting the buttons. Okay? But for drilling in this analysis, I mean, just going through and going, okay, should I take this trade? What should I be looking for? Is it an ETX? Or, is it a double TX? Is it OD? Is it hidden divergence now? Like, if y'all just spent 30 minutes a day doing that, just reviewing the day and going through every trade, I mean, I'm just being real. Would that make a big impact on your trading? Do you think that would actually, I mean, you're talking about how big of an impact this had, and of course it helps to have me walking you through it all. But I mean, y'all can go one bar at a time and scan and analyze and look. And if you don't know, like, you can always ask, right, in the room. So it's about sharpening. It's just like, going out and shooting 20 or 100 free throws. Jordan, even after he won a game, would shoot 100 free throws after every game because he's like, I should never miss a free throw. It's the free shot. It's easy shot. Nobody's in my way. It's the same shot, same distance every time. And he was obviously the greatest of all time, no matter which way you slice it. Okay? And the man, after a winning game, would go shoot 100 free throws. Winning day, losing day, whatever. Spend 30 minutes. 30 minutes or an hour doing this every day is going to make you an incredible... I mean, imagine if you spent 30 hours over the last month doing this. Where do you think you would be if you did that over the last month? If you'd spent 30 hours, 1 hour a day, or just say 20 hours on weekdays, whatever. 20 hours doing this every single day. Do you think you'd walk into each day sharper? Do you think you'd be even further ahead now than you were a month ago? So, where do you want to be in 20 days? Like, you don't have to go do market... I mean, replay is great, but you don't have to go do market replay. Just do review. Like, where do you want to be in 20 days? Do you want to be better? Do you want to be, one of my favorite sayings by a guy named Johnny Wimbrey. He wrote a book called From the Hood to Doing Good. And he had 3 brothers. One brother ended up in prison. One brother became a preacher. And he became a motivational entrepreneur, speaker and entrepreneur. And very rich. And he said all 3 of them didn't have a father. All 3 of them had the poor life circumstances. All 3 of them went through the exact same thing. But all 3 of them made choices. Okay? And, there's one of them made a bad choice. One of them made a different life choice. He made a choice to, do other things, whatever. But it was about choices. And my favorite saying that he has is, what are you doing today that you did not do yesterday to make your tomorrow better than today? And maybe it's, well, yesterday I didn't go over today's charts, but yesterday I went over yesterday's charts. It's like, what are you doing today to make your tomorrow better than yesterday? If you want to just get it really short, what are you doing today to make your tomorrow better than yesterday? So, attending this webinar is 1. Going through and doing reviews tomorrow is 2. And maybe add that and see where you're at in a week. See where you're at in 2 weeks. And just make yourself do it every day. Set a goal every day. And that's a simple, easy thing to do. So, and if you get stuck and you don't know about a trade, that's a great time to ask. What would this trade be? You could just take a screenshot, use the mentor rooms, or ask inside the elite room when I'm in there. I'll be glad to help you. Yeah, and who you associate with is choices that you make, right, Damien? Who you associate with becomes what I've learned, one of the books, from greater to great, from good to great, talks about the two biggest things that impact you is what you read and who you hang out with. So, I mean, what are you reading? What are you studying? And are you hanging out? Are you actually engaged in the community, or are you just looking? You're not actually hanging out in the community if you're just looking. But if you're engaged in the community and you're asking questions, posting charts, then that helps you go from good to great. And that's a great book, by the way. If y'all are looking for a good book to read, Good to Great. And it will help you go from that just okay to fantastic. All right, well, I think that was a great webinar. I enjoyed the interaction tonight. That makes it where I'm a lot more, you can tell I have a lot more energy, a lot more interactive y'all are. And I think y'all get a lot more out of it that way. So we feed off each other. And I hope y'all have a fantastic night, and I will see you tomorrow morning in the trade room, okay? Now, I'll upload it to YouTube, and I'll upload it to the Facebook group before I check out for the night, okay? All right, y'all have a great one. Check us out at apexinvesting.com.